Today we're very pleased to have Joe Mahon and Bill Blazar with us. I think you know some of those individuals. Joe Mahon is an economist and an analyst at the Federal Reserve Bank of Minneapolis, a role he has had since 2010. Prior to that, Joe was a staff writer and analyst for federal publications such as the Region and Fed Gazette. His primary responsibilities involve tracking several sectors of the 9th District economy, an area that covers Minnesota, North and South Dakota, Montana, and portions of Wisconsin and Michigan, so quite a large area. Industry sectors he follows closely include agriculture, manufacturing, energy and mining. He also performs special analysis at the request of the bank's senior management and the board of directors, and he holds degrees in economics and journalism from the University of Minnesota. So lots of responsibilities. Bill Blazar, many of you are familiar with, is Senior Vice President of Public Affairs and Business Development at the Minnesota Chamber and also directs Grow Minnesota, which is the Minnesota Chamber's statewide business retention and expansion program. Blazar represents the Minnesota business community on several task forces and study groups. He is currently a member of the U.S. Chamber of Commerce Labor Relations Committee and its Immigration Policy Subcommittee. Lots of work there. Bill has a Bachelor of Arts degree in Political Science from Northwestern University and a Master's degree in Public Affairs from the Humphrey Institute of Public Affairs, University of Minnesota. Joe will speak first, then followed by Bill. Why don't you hold your questions, please, for a brief question and answer session following then Bill's remarks. So please join me in a warm welcome for Joe Mahon and Bill Blazar.
Well, thank you for the introduction, and thank you for welcoming me out here this morning. I'm going to be talking a little bit about the economic outlook here in Minnesota. I'm going to try and keep my remarks brief because I want to leave plenty of time for Bill and plenty of time for questions at the end. Ordinarily, I'd ask folks in the audience to go ahead and interrupt me at any point, but we'll just wait for questions at the end. So I was just reading the other day that January 6th is statistically the most depressing day of the year because it's right after the holidays. And for me, it's just the opposite. This is actually the most wonderful time of the year because we come out with new forecast materials to release. And we just released our regional economic outlook on Monday of this week. And, you know, I go out and I give a fair amount of these talks. And so it's always good to have new material to work with. So, and I think that the news I'm going to be sharing with you is pretty good on top of that. So, but of course, keep in mind that these are just forecasts that I'll be talking about. And I like to say that economists got into the business of forecasting so that we could make weather people look good. It's a fairly inexact science. So I want to start off actually, just a real quick show of hands. I'm going to take a survey here. It's not going to be as technologically savvy as the one that was just conducted. But I want you all to think about your communities where you do business and where you live over the next 12 months. So for 2014, I want you to think about your economic outlook for your community for things like business growth and employment growth. And everybody in the room who would consider their outlook strongly optimistic, if you could raise your hand. Okay, that's a pretty good sign. How many people would say they're mildly optimistic? They balance on the side of optimism. All right, that's about everyone else. Does anyone in the room have a pessimistic outlook for their community? All right, that's pretty good. That's I think that's a pretty good signal. And so I like to do that when I kick things off because. The forecast that I'll be talking about a little bit, if you could just advance the slide for me. And all of this is going to be available on our website, minneapolisfed.org. And one more. Sorry, I had to bring my own laptop because the Fed makes it difficult for us to use flash drives for data security reasons. That's fairly obvious why. But we have basically two tools that we use for doing these forecasts. Number one is a statistical model that we run. It's a computer model where we basically look at the historical way in which the data and which economic indicators tend to move together and project trends outward based on that. It actually tends to do fairly well over time, and I'll show you some charts on how we've done over time. But in order to balance it out, because that statistical model doesn't have people in it who are making decisions and who know what's going on in the real world, they don't know about things like the business-to-business tax, for example, or the federal sequester and things like that. So we also do a bunch of surveys like the one I've just conducted here. And we have a large database of business contacts that we tend to survey. And if anybody actually has anyone, show of hands, has anyone in the room participated in one of our surveys before? That's good to see. Okay, so thank you for that. And if anybody, I would ask you, I'll put a plug in real quick. If anybody's interested in being included in our surveys in the future, please leave a business card at your table or come up to me at the end of the session this morning and hand me a business card, and I'll get you on our list. And we'd love to have you in our database so we can contact you and pick your brain when the time comes. If you could move along. Thank you. So I'm going to be talking just about Minnesota this morning, which is part of the Fed's 9th district. There are 12 Federal Reserve districts. Basically, we're the north central part of the country. You can see it up there on the map. I won't dwell on that. And so we released a forecast in 2013. I made a joke sort of at our own expense earlier about our forecasting ability, but actually we did a decent job. And again, I'll show you some charts real quick of how we've done over time. Last year, we predicted positive growth in the number of jobs created in Minnesota. It ended up coming in a little bit weaker than we expected, but fairly close to target. Unemployment was about exactly what we predicted it would be, which was surprising actually in retrospect, because at the beginning of the year we forecast the unemployment rate in Minnesota to come down quite a bit, and I wasn't quite sure that I believed that, and it actually has. So that's been pretty good. Personal income growth was fairly close to what we forecast, but a little bit slower. And home building actually has been really strong, but actually at the beginning of the year we were expecting it to be a little bit stronger. Those are basically the 4 variables we forecast in our forecasting model. So this chart, which isn't actually showing up too well on this screen, I guess, shows you what these series have been over time and what we forecast over time. So this is employment. That is, this is the percent change in the number of jobs in Minnesota. That just gives you kind of historical perspective on it. You can't actually, unfortunately, see what our forecast was too well. But trust me when I say we've done a good job over time, except for the big glaring exception, if you could see it, is the recession in 2008 and 2009 when employment fell a lot, and the model didn't quite see that coming. And if you want to move to the next one, this is unemployment. Once again, if you could see, we actually pretty much nailed it last year. We've been closer over time to forecasting unemployment than we have for employment. The difference between those, just FYI, when we talk about employment, we're talking about growth in the total net change in the number of people working, the number of jobs in Minnesota in this case. Unemployment is that attempt to measure the number of people who are looking for work but are not working. And that's done by they're done by 2 different surveys. In fact, just this morning, the Bureau of Labor Statistics released the National Employment Report for the United States. It came in a little weaker than expected, 74,000 jobs for the month of December. So we now have the first estimate for the yearly job growth for the nation as a whole. Like I said, 74,000 was a little weaker than expected. No, that's good. That's good if you want to leave it there. It was a little weaker than expected, but I'm kind of curious to dive into those when I get into the office and see. The seasonal adjustment can be a little weird. But generally speaking, job growth nationwide was fairly consistent with what it had been the previous 2 years, and that was true in the district as well. This chart shows you, it compares Minnesota and the United States to show you where job creation happened, and this is up through November because we don't have December data for Minnesota yet. You can see sector by sector where the job growth happened in Minnesota. Strongest growth was in natural resources and mining, but the kind of asterisk to put on that is that's a fairly small portion of the overall labor force. So they had fast growth, but we're not really talking about too many people. Really strong growth in construction. The only sectors that shrunk were government and surprisingly manufacturing, but that was after 2 years of pretty strong growth in manufacturing employment. We saw a slight reduction in manufacturing employment in Minnesota last year. So moving on to our forecast for 2014, and I'm going to just, again, I'm going to try and get through this material pretty quickly. Basically, we're forecasting kind of more of the same. Continued moderate growth in employment. We think that unemployment's going to come down a little bit, but in Minnesota, at least the unemployment rate is pretty close to what's consistent with a fairly tight labor market already. It's already come down quite a bit. So we're not forecasting the unemployment rate to come down too much more. The interesting thing that we've done are these surveys. The survey results are showing that businesses that we surveyed, and consistent with what we found anecdotally in the room this morning, are pretty optimistic, both for their businesses and for their communities. And we do a few different surveys. We do one of kind of a general business outlook poll, and then we do one specific to manufacturers. Manufacturers also pretty optimistic for their firms in the coming year. and we're forecasting home building to continue returning. So this shows you that basically the time series of what I did this morning when I said how optimistic or pessimistic are you. This is what's called a diffusion index. That blue bar in the middle is the value of 50. Anything above that indicates expansion, or that businesses on average are telling us they're optimistic. Anything below that indicates that they're telling us on average that they're pessimistic. And what's interesting is if you could compare this to the job that our forecasting model did over time, the businesses that we surveyed, they do a better job seeing turning points in the economy, which just sort of underscores the value of why we do this. Business optimism started to dip in about 2007 prior to the recession. So it was a better early warning sign, and I think it's pretty encouraging to see that business optimism is up so much this year. We broke this out here by the businesses in the Twin Cities versus in Greater Minnesota. You can see that in Greater Minnesota this year businesses are more optimistic than those that we surveyed in the Twin Cities. Last year it was the reverse. Actually, the Twin Cities businesses were more optimistic. So again, that's at a 7-year high. This shows you, well, you can't see the 2010 growth, but basically we are expecting the employment growth rate in Minnesota to slow, but that's important to point out that I'm talking about the growth rate slowing. So we're still expecting positive growth in the amount of jobs. It's just we're forecasting it to come in at 1.2%. None of these, by the way, are crisp predictions. So when we say 1.2%, that's kind of the middle range of where we expect it to come. So the forecast has a fudge factor figured into it, a confidence interval in statistical terms. So it could be higher or lower than that. That's just kind of the median or the average of our forecast. And you can see in the other states it's fairly consistent. The one glaring exception is North Dakota. There's an oil boom there for those of you who've been, living in a closet for the last couple of years. And it's the labor market in North Dakota is just crazy. And I think that's actually been kind of a boon to the Minnesota labor market. It's taken some of the pressure off of unemployment in Minnesota, and I think the data bear that out. So this is showing you really the blue bars are the ones that are important, so it's not important. Doesn't matter that you can't see 2013. This shows you basically that same optimism pessimism index, but instead this is businesses' expectations for employment at their firms. So we're not asking them what do you expect the unemployment rate to be nationwide. We're asking them, do you plan on hiring people? And what you can see is that on average across the region, once again, that solid line in the middle is a diffusion index. Anything to the right of that indicates that they're telling us, yes, on average, they are planning on hiring. Further to the right indicates higher expectations. And you can see in the Twin Cities and the region as a whole, the outlook is for increased employment. And this is, again, consistent with what they told us in the survey last year and what ended up kind of being the case. So I think that these are fairly reliable guesses. And it's also worth pointing out that, that as I said, all forecasts are sort of subject to error, but they're subject to error on either side. And so it could be that we're actually being a little under optimistic compared to, and since I'm sort of optimistic by nature, I like to think that. But actually our models have done a pretty good job over the last few years with the forecasting. This shows you that same, the same thing I just showed you, the employment expectations, but instead of by region, I'm showing it to you by sector here. So what you can see is that generally across business sectors, the outlook is for increased hiring. The two exceptions are in services and in retail. Businesses told us that they're probably planning on cutting staff. But on average, across all the businesses that we surveyed in Minnesota, there's a positive employment outlook. And you can see particularly fire at the top there is finance, insurance, and real estate. It's not arson, which is hopefully not a booming business. But the financial services are expecting the most robust hiring, but also construction and manufacturing, I think, which is a pretty good sign too. This is our forecast of the unemployment rate. Again, this is an attempt to measure how many people are out of work but would like to be working. And we're expecting it to come down in Minnesota to 4.3%, which is actually a fairly significant reduction from its current level, which is still above 5%. Again, there's some kind of fudge factor in there. Yeah, so the outlook again across the region is for unemployment to come down from its current level. And there's still some signs with the businesses that we talk to that even though we've seen employment grow, we've seen unemployment come down, there's still some slack in the labor market, and you can see that in this chart, which tells you business expectations for wage and compensation over the next year. The vast majority of businesses we surveyed told us 3% or less for their expectations for increasing payrolls. And I think that's consistent with there still being a lot of slack in the labor market. once again, and kind of the sort of the last thing I'm going to show you here, actually, because we're the Fed, and so we have this sort of dual mandate to try and keep unemployment low and to try and prevent undue inflation. And so we ask also about outlook for prices. The biggest outlook for price increases is in retail, which I think is curious because they also told us that they're planning on reducing staff. So apparently that means that retailers are planning on making a lot more money this year in terms of profits. But on average, the respondents that we surveyed told us that their outlook is for fairly moderate increases in the prices that they charge for their goods and services. And I think that I have one more, which is our forecast for personal income. And that's it. Yeah, there's a bunch of other stuff I have on the sectoral outlook. The personal income forecast is fairly consistent with the last year, and that's sort of an attempt to actually measure output for the Minnesota economy. It's not really necessarily what people are earning. It's a measure of basically how much everyone's making divided by the number of people in the state. So it includes other sources of income like dividends, rents, government transfers, things like that. And that's expected to grow at 4.7%, which is fairly strong, a little bit lower than it grew last year, though. So that's my outlook, and I'm happy to take questions after I turn it over to Bill, and I hope I haven't taken up too much time from him. Thank you.
Thank you. It's great to be here. I may have said this before, but the other time I was here, when you go around the room and introduce the businesses that sponsor the event and the public elected officials and other leaders that are here, I think it's a testament to the success of the TwinWest Chamber. And if I could take this model and bottle it and take it to every chamber in the state of Minnesota, I would do that. So I want to first thank you for the invitation, and then thank you, members of the business community and our elected officials who are here with us this morning. It's really great to see you together and together on a regular basis. I think that's really key to both the development and growth of our state's economy. So thank you for that. I'm going to talk about the economy and how we're doing, and then what we're seeing going into the future. When Rich came up and said hello to me this morning, he looked at me, he said, "So we can bank on your comments," to which I said, "That's the last thing in the world I want you to do." That actually made me break out in a cold sweat. But then I listened to Joe, who's actually a trained economist. And he works at the Federal Reserve Bank and has got this great tradition of understanding the economy. And I breathed a little bit of a sigh of relief, because what I'm going to show you from our Grow Minnesota visits is in many respects similar to what he's reporting, looking ahead. I'm going to talk about current economic conditions and what we think will happen through the end of the year. And many of the themes that Joe mentioned, you're going to see in our slides as well. The Grow Minnesota, which is the source of all the information I'm going to talk about, is the Minnesota Chamber's Business Retention and Economic Development Program. It's in its 11th year. We operate it in partnership with about 70 local chambers around the state, one of which is the TwinWest Chamber. In fact, the TwinWest Chamber has been a partner of ours in this program for the last 11 years. And Grow Minnesota, if you wanted to summarize it in a couple of words, it's conversations between business leaders like yourself and the businesses in your community. It's our opportunity to thank companies for being here, employing people in Minnesota, learn about what they do, and ask if there's anything we can do to help them be more successful. So last year, here, can I do this? Okay. I'll do it from here, okay? All right. So last year we saw 900 companies, and about a quarter of those we're seeing for the second, third, or fourth time. Keep in mind we're trying to build relationships between those companies and your community, so that if they've got an issue, instead of going quietly into the night, they'll maybe call the chamber, call Deb or call Brad and say, "Hey, can you help us?" So last year, we worked with almost 200 companies on a whole bunch of different problems of all kinds, And I thought I'd just show you one because where's Brad? This is the Brad Meyer Memorial slide. This is Connie's chairs. And the reason I show it to you, Connie is a entrepreneur in Florida who actually grew up in Minnesota. And when she decided she wanted to make chairs for children, she wanted them made in the U.S. and she wanted them made in Minnesota. So she called Grow Minnesota and said, I want to make these chairs. Who in Minnesota could do it? This chair that you're seeing is made by Advantage Cabinets in Owatonna. And since Grow Minnesota is now in its 11th year, we probably get, I don't know, 2 calls like this a week. And we take every one of them seriously. And most of them don't turn into much of anything. But here's one that did. Now, Connie's chairs isn't going to double employment in Owatonna. But in an economy like ours, every little bit helps. So here's a new product for a Minnesota business that employs a bunch of people in Owatonna. That's an example of the kind of work that we do as follow-up to Grow Minnesota visits. So now, to put it in perspective, over the 11 years, we've seen about 8,000 Minnesota companies. And we try to keep the information as current as possible. So even when we're not seeing a company, if we hear something about it, we're updating our database. And so we think that based on the conversations, we have a pretty good understanding of the state's economy. The one thing I'll tell you is that it's a lot of conversations with Minnesota companies, but it's not a random sample of anything. So there is the bias. Each of our local chamber partners determines the companies that they want to visit in a particular year. And so what we learn is a function of the companies that they decide to visit. We do some coaching when we hear about a change in leadership or a change in ownership in a Minnesota company. We try and get a visit there as quickly as we can because we want to know what's going on with the company. So let me talk to you about what we heard last year and how that compares relative to the previous 10 years. And I'm going to do that on kind of 5 measures. First, I'm going to talk about profits, sales and profits. Secondly, about innovation, the development or the introduction of new products. Third, exporting. And I've got a pretty broad definition of exporting. I'll explain that when I get there. Fourth, expansion and investment activity. And then finally, employment. And as you look at these slides, they're going to look in many respects like Joe showed you one of, I think it was the employment with the big dip. And then the big dip is a big theme, whether you're doing one-on-one conversations with Minnesota businesses or forecasting the entire economy. So the summary here is, just like Joe said, the economy's gaining strength, but I think I, perhaps, am a little less optimistic about the future than maybe this audience. And it's based on the companies that we've seen this year reporting a good year, but when you ask them about the next 12 months, there is some hesitation, and you'll see that here in the slides. So this is sales, and there's the big dip. Anybody who can't see that recession needs new glasses or some sort of help. And what I want to emphasize that you're also going to see in this, you see the big dip, but then if you look at the last 12 months, this is sales, you see some trailing off. So we haven't maintained the slope of that line. And then if you look at profits, you see the same thing. These are companies that report to us that their profits are up. And if you compare sales versus profits, one of the themes since the recession is that companies are buying business. Their sales are growing a lot faster than their margins. And maybe the retailers are about to change that. Who knows? But the last couple of years, we've seen that difference in the percent of companies that report growing profits and the percent that reports growing sales. We've seen that narrow. So I think as the economy gets stronger, I think business margins are probably improving to some extent, but they clearly haven't taken off or anything like what they were pre-recession. We always ask companies about whether or not they've introduced a new good or a new product or service in the previous year. And the reason we ask that is because as much as Minnesota's economy has changed, it is still a homegrown enterprise. And unless Minnesota companies are bringing new goods and services to market, we're in trouble. So, and here what you see the recession. It's not as pronounced, but it's there. And you can see how we've tried to sort of staggered our way out of it. And the last 12 months, from our perspective, are a little concerning because we've had fewer companies telling us about new products or services. And just maybe to illustrate how this works, anybody know what that is? Other than my friends from Grand Casino Hinckley who heard this presentation before. Anybody? Somebody guess. If you don't guess, I'm going to call on a legislator. Senator Hand, what's that?
Boy, you got me a picture of somebody.
Okay, all right. Representative Seltzer, you want to guess? No. Okay, good. How about Representative Loon? Okay, so now this is pet chats. Okay, this is made by a company in Burnsville, Answer Innovations, and they developed the idea. They contract with a manufacturer in Minnesota to make it, and here's the best part of it. And if I can get the pointer to work, you see this this little slot at the bottom of the device, and anybody know what that is? Actually, Joe, go to the head of the class. He's not only an economist, he's an inventor. Yeah, you're a dog owner. So that gives your pet a treat. So, and the reason that I tell you about that is the best part of it is guess where the treat is made? It's made at Tuffy's in Perham, Minnesota. So this is the proverbial threefer. The product was developed and designed here. It's assembled here. And the inputs are coming from here. So just not to belabor it, but innovation is really important to this state's economy. And the more we do it, so when we see that line trailing, that gives us some pause. Okay, let's go to exporting. I take a kind of a broad view of exporting. We consider it any sale that occurs to a customer outside of Minnesota. Because those sales bring new dollars to our state. That's how we're going to create wealth. So this slide shows the sales to the United States. These are companies, actually, this is the percent of companies that tell us that their fastest growing market is outside of Minnesota, but domestic. And I should have said this before. The blue line is the Twin Cities. The gold line is Greater Minnesota. And that's consistent throughout. And so there you can see that's the blue line for the Twin Cities. That's a pretty healthy a picture that the companies that we visited with last year, a growing percent of them are reporting that their fastest growing sales are to customers outside of Minnesota but within the U.S. You can see the trail off in Greater Minnesota. I'm not exactly sure what's happening there. I think it may be some link to the change that's going on in the farm economy. The farmers have enjoyed several years of growing prices and at least Minnesota strong crops. This last year we've seen some trail off in prices and a weaker harvest to some extent. And that may be what's pushing that line down. But at least in the metro area, it's pointed in the right direction. And again, you can see the recession. But here's the one that really drives me crazy. This is international. This is the percent of companies that tell us that their fastest growing market is outside the U.S. And there's no good news there. The world economy is growing faster than the U.S. economy and has been for at least a decade and probably will for the next 2 decades. It's really important if Minnesota's economy is going to succeed and grow for us to have more businesses reporting that their fastest growing markets are outside the U.S. And the reality is that we've got a lot of Minnesota companies that what they do is perfect for the world economy. A lot of countries around the world are developing middle classes. We make a lot of stuff and sell a lot of services that are in high demand by middle class economies. If you look at companies like General Mills, where is their business expanding most? Well, in places like India, where when you get a middle class, you get a grocery store. When you get a grocery store, what do you need? Yoplait, yogurt, and Cheerios, right? Okay. Hormel. Last year, Hormel bought the Skippy brand. So Hormel gets into the peanut butter business. Well, why is that? It's not because they like peanut butter. It's because Skippy peanut butter is available in almost every country in Africa and Asia in their grocery stores. It was a great way for Hormel to boost their international sales. So the fact, I think last week they reported Minnesota exports were up for the third quarter. I think even broke a record. So we're doing a good volume. Our problem is that the base of companies that are in export markets is too small, and based on the Grow Minnesota visits, isn't growing. And I think that's something we need to work on. And just so we don't get confused here when we say exporting, that is the American hospital in Dubai. So why am I showing you a picture of the American hospital in Dubai? Somebody guess.
Glass.
What's that?
Glass.
No, that's a great guess because we make a lot of glass. Viracon and Owatonna, Brad, could have made the glass for that building. I don't think they did.
There's pet chats in every hospital.
Exactly. How'd you know? So no, that hospital was designed by ACOM, which is a Minnesota, which has its healthcare and hospital group based in Minneapolis. It used to be called Ellerbe Beckett. Ellerbe Beckett probably designed more hospitals in Minnesota and the Midwest and maybe even the U.S. than probably any other architectural firm. Well, they've got a huge practice in downtown Minneapolis, and they designed that hospital. So when we think exporting, we don't just want to think clickers. We want to think services. I mean, our healthcare management industry has great export potentials. If you get your teeth cleaned in Poland, the claim for that cleaning is administered by a Minnesota company. Okay? They develop the software and the technology to process that claim. There's lots of opportunity to export services, maybe even more than there is manufactured goods. All right, so that's exporting. And then, so let's go to expansion or investments. When we ask about expansions, we typically hear about 3 things. First, are you going to build a new facility? Secondly, are you going to make a major investment in new equipment? So when Gerdau Steel in St. Paul decided to build a new caster for making steel, it's a $60 million machine, that would have showed up in a Grow Minnesota visit. And then third, are you going to remodel the facility that you have? And so what you see here, you see the recession. Anybody miss the recession here? When it expansions? And then we're climbing our way out of it. But when you ask these companies about their investment plans going forward, at least the conversations we had those last 12 months, we see, a little bit of a chill in the environment. And we see it for both the Twin Cities and Greater Minnesota. So, and here's the, I don't have time series on the nature of the investment. We didn't collect that information as in the past as well as we do today. But what you see here, it's significant to us that the far left, that they're going to invest in new facilities, the percent of companies that when they say they're going to expand, that's what they're going to do, that outranks those that are remodeling, at least in the Twin Cities, or buying equipment. I think that shows a higher level of confidence in the economy, that they're actually willing to talk about a facility as opposed to a new machine or bumping out a wall at the current facility. So I think it shows some underlying confidence in the economy. I wish I could show you that over time, and in a couple years I'll be able to, but for now that's all we have. Okay, and this is the trend line. We just took the expansions, and we ask, when somebody tells us they're going to invest, what's the first question that we ask? Somebody says, I'm going to invest in my business, and you're from the Chamber of Commerce. What do you ask? Where? Of course. So we ask, are you going to do it in this community? Are you going to do it in Minnesota? Are you going to do it elsewhere? So what here, the blue line and the trend line shows that at least for the Twin Cities, it's pretty flat. We don't see a positive trend. We don't see a negative trend. But if you can see the last year, that line is pointed a little bit in the wrong direction. Greater Minnesota, there's some optimism, and we're seeing actually it's more, if somebody tells us they're going to invest and it's a Greater Minnesota business, they're much more likely to be making that investment in their community or elsewhere in Minnesota. And it may be that, in the Twin Cities, it's the big city, people are more familiar with other parts of the world, other places where they can be successful. Maybe that's why we have the difference in those two lines. But it's pretty pronounced, the difference between the Twin Cities and Greater Minnesota. Okay, let's look at jobs, whether or not they've added them in the last year. There you can see the recession, you can see the climb out, and then you can see this kind of softening. So these aren't companies who are telling us they're going to lay people off. We're asking them if they're going to increase, kind of like what Joe and the Fed did. And looking ahead, asking them about what they did this year and what they're thinking about the next 12 years, we're seeing some softness, not unlike what the Fed reports. But what's interesting too, and this is a different graph, so you want to look at this one carefully. We asked the companies about their experience filling openings. So did it take you longer than expected to fill a job, or were you unable to fill it? And not surprisingly, if you think about the climb out, people in those years looking for workers, what we see is a growing number of companies reporting difficulty in being able to find and fill jobs. And interestingly, even in the middle of the recession, we had companies telling us that they have an opening, can't fill it. So if we go back to this slide, companies expanding elsewhere, what's the number one reason a company tells us that they're not going to expand in Minnesota? Somebody want to guess? What's that? People is number 2. Taxes is number 3. Taxes and the cost of electricity and other inputs are number 3. What's number 1? Put on your business hat. It's a business decision. I got a big customer in Chicago, so I'm putting a facility in Chicago because I want to treat the company well. I want to make sure I get the job done and keep the customer. So it's a business decision. But number 2, the workforce. Businesses, it turns out, at least Minnesota businesses, have relatively little tolerance for having the opportunity to grow and then not being able to get the talent to do it. That really makes them think, why am I here? Why am I paying higher taxes? Why am I going through our tortured permitting process when I want to expand? When I can't get the one thing that really makes this place worth doing business in, which is people. So when that workforce, at least this is what we're learning through Grow Minnesota, when that workforce isn't available or isn't up to snuff, all of the other warts on the Minnesota economy seem to become more pronounced. And that's why this particular trend is worth our attention. So who do they have trouble finding? These are companies who were looking for people and couldn't fill it. Not surprisingly, production and assembly workers are high on the list. But as are construction and trade workers, believe it or not, and then also the architects, engineers, those high-tech, high-skilled workers. And this picture really hasn't changed much over the last 5 years. Even in the recession, we had companies telling us they couldn't find production workers. So finally, just to bring it all together, and then let's take some questions, is you can see the measures. I think our economy clearly, at least the Twin Cities and to a great extent greater Minnesota, has recovered substantially since the Great Recession. But I just don't see any exuberance. I see the companies that I talk to, they're reporting a good year, they're optimistic about the next 12 months, but they're looking over their shoulder. There's a certain nervousness, and much more pronounced, at least for us, in the last 6 to 8 months than the previous year. Nervousness about all kinds of things related to doing business in Minnesota. Thank you very much, Joe. Let's take some questions.
Thank you to both our speakers. I'm in the back of the room with a microphone for someone who has a question. Raise your hand and I'll bring it over. I'll start off here as I walk over here. One of the things I want to know about is as the Congress, the federal Congress starts to debate the unemployment benefits and extending those benefits, have you guys given any thought to how that will affect the economy?
You're from the Fed.
Well, it's outside my area of expertise. It's a double-edged sword. I think that there's quite a bit of evidence actually that in normal times, and the question then is whether we're in normal times or not, but in normal times, having unemployment benefits for a longer term tends to coincide with people staying unemployed for a longer term, and I think that there's probably a natural explanation for that. The question is whether or not we're in normal times right now, and of course, the reduction in unemployment benefits has pretty real effects for people who are unemployed, and then of course the places in which they do business. So that's my fancy attempt at giving a non-answer to that question. Yeah.
Anything to add, Bill?
I go back and forth. Maybe this is an economist type answer, which is, I worry about the impact on the incentive in terms of seeking work, and actually, because we do have employers who tell us they can't fill openings, and some will say, well, I got a lot of applicants, but nobody was qualified. They couldn't. Their math skills weren't up to speed, or they couldn't pass the drug test. I hear that more often than you would think. But then you do, inevitably, these employers report they could have hired 5, but they only hired 2. And I wonder how the unemployment benefits and what we're doing there play into that equation, and whether or not that maybe makes people a little less willing to work.
Bill, you may have answered this question, but as I talk to different employers, there might be a difference between a shortage of applicants and a shortage of hireable people. The thing that they tell me, and I'd be interested in your reaction, is that they're looking for character traits that the applicants often don't have. It's not just education, it's also character. I wonder if you'd want to comment on that.
Yeah, that's the character trait is probably a good way to put it. I have a surprising number of employers tell me that when they interview someone, the applicant doesn't, understand that you got to come to work 5 days a week, that it's not a 3-day work week or a 4-day work week, that it's 5 days, or that other problem solving and initiative to the willingness to be able to kind of mix and match so that, yeah, I got hired to work on the assembly line, but if we need help in the warehouse, I might do that too. The current workforce doesn't seem to be very adaptive and willing to kind of roll with the punches, and I think that bothers employers. So the character is important, but the one story that I remember the most is a manufacturer in southern Minnesota that does a lot of welding telling me that, we weld better than anybody else in the world. And, of course, we do it differently. I said, yep, that's great. I believe it. I'm sure you're great welders. And he said, and I can teach anybody I hire how to weld like we weld. And I said, great. And he says, but I can't teach them to read and write. And that's a big problem. Those basic literacy skills may be as big an issue in the workforce as the character issues. And it's not reading and writing alone. It's also basic math skills. We just don't, our younger workers are not getting those skills.
Can I just comment on that really quick? I just want to agree 100% with what Bill just said. We anecdotally speak to a lot of businesses. This is also something we ask about in our surveys. We hear a lot about the skills shortage, and I can't tell you how many times I've heard exactly what you identified, which is a shortage of, a lot of times I hear the term soft skills, character, things like that. As Bill mentioned, knowing that you have to show up to work on time or that you have to call if you're not going to. Communication is another big one we hear about, not just reading and writing, but also just the ability to resolve disputes, things like that. And I think that's really disconcerting because, as you said, technical skills are things that you can hire professional training or learn on the job. It's really hard to teach people these sort of social capital types of things after the fact, and I think it makes a strong case for investment in early education and in K through 12 education. Other thing I want to mention real quick, because I didn't mention it in my presentation, but also to agree with Bill, our surveys we ask businesses what are the challenges they're facing, and the number one challenge they identified this year was finding skilled workers with the appropriate skill set, and that's up from the last few years when that was identified as a challenge but hadn't been the number one challenge.
This will be your last question before we wrap it up. I come from the wholesale trade, and we're very optimistic about what's happening. However, I noticed in your slide, Jim, that the service and retail sectors were showing decline or not growth at all. I was wondering if you could kind of comment on that as what's behind the decline in the retail and service section. And then for Bill, does that tie then in some of the downward trend, and maybe that's the major effect for the downward trend on some of your slides for 2012-13?
Well, I don't know. I don't actually have a good answer to that question. So I want to thanks for asking, because it gives me something to think about and to look into. One thing I would say, just as a sort of a note of caution, there's two things in my presentation regarding retail. Number one is it was one of the strongest growing sectors last year. And so I think that some of the kind of more moderate outlook that you see in retail is maybe due to people saying, well, we had a strong year last year, we expect things to come back to normal this year. That's typical. We saw it last year, for example, with agriculture, because it had been such a strong couple of years, people were expecting things to come back to earth. And so I think that that's part of the story. The other thing might have to do with when this survey was conducted. We conducted our surveys primarily in early December and late November, so it was kind of the beginning of the holiday season. And I think at that time it looked like holiday sales weren't going to be as strong. And so that may have actually kind of colored retailers' perceptions when they were responding to this survey. We have some indicators now with the kind of end of the holiday shopping season that it was actually, that we did see kind of a sort of moderate growth from the year before. But early on in the season, it looked like maybe it wasn't going to be as strong. So I think that maybe kind of colored some of the perceptions a little bit too.
I think part of it, too, may be that we kind of overbuilt retailing leading into the recession. And coming out of the recession, one of the good things is that our savings rate is up. I think a bunch of Minnesotans or Americans kind of learned that we need to put more money maybe in the bank and maybe do less consumption. And that may be kind of moderating the growth in retailing, at least consistent growth. One thing that would actually help retailing, I think, believe it or not, would be immigration reform. The fact that we've got 11 million people in this country who are here without documentation, that puts them in many respects kind of in the shadows of society. And one shadow area is their ability, for example, to have a credit card and to be a consumer just like everybody else in this room. And so 11 million people, that's a pretty sizable market that is probably, most of whom, if not all of whom, are employed, making money, and aspire to be Americans in every respect, including retail consumption. So, you know, one thing we could do maybe that would actually help retailing and maybe help it catch up might be to push along immigration reform.
Thanks, Mike. Thank you. Appreciate it, brother. Thanks, Joe. Thank you. Appreciate it. Very good. Thanks, you guys. If you have other questions, I'm sure they'll be around. I know we had just a few. I want to thank Joe especially. I had a short stint as a weather guy way back when, and that would have been a great excuse to blame you guys instead of us. Real quick, couple of just reminders for you. On the back of your agenda, there's a United for Jobs logo. That's the effort that's being done statewide to repeal the B2B taxes. We'd love to have you sign up. And if you have any personal stories about that, let us, Deb or I, know, and we'd be happy to share that with legislators. A couple of networking events, 3 of them coming up. We've got the Overtime on January 16th at Executive Suites, Business Showcase on the 23rd at Mini Fitness, and on the 22nd we have our Leadership Luncheon with Jennifer Smith, CEO and co-founder of Innovative Office Solutions. So check the website for that. We want to thank all our sponsors right here. I also want to thank Brian Bratt for taking all the photos today. He does a great job. And join us next month, February 14th. We're going to have the leadership of both the House and Senate here to kick us off for the 2014 legislative session. Thank you all for being here today. Have a great weekend. Take care.